Uber, Uber, Uber-doo. Yes, Uber Eats. Uber is everywhere. Why is this stock not really flying high to the world above? Is this stock got some room to grow, or is it going to be a bankruptcy option? Uber has struggled for a long time. Everything, they've got all this stuff that they're looking at, trying to get to technology. They're looking at autonomous driving. There are so many things with this company that looks positive, but they continue to crash and burn when it comes to net profit. You're going to find that out right here as I do a stock analysis on Uber Technologies. And if you stay right to the end, we'll give you the possible intrinsic value that, to be honest, folks, I was absolutely stunned with where this price is compared to the stock price right now. So you have to wait to the end and find out if it was a brilliant one or absolutely the stock is absolutely overvalued. Find out right at the end so you get the best out of this video. But let's get to it. Number one, Uber. Yes, they take Lyft and everyone else out the world. DoorDash, forget about them. And even if DoorDash is higher, Uber's got it all. Let's talk about it right here, right now on Barry Charles. Yes, Uber's revenue is $31 billion in 2022 from $17.4 billion in 2021. So that's absolutely outstanding. But from a minus 570 million in 2021. Oh wait, sorry, I got this wrong. Minus 9.1 billion in 2022. And well, it's going to be minus again. Minus, it might be minus a billion, but still, at least that'll be an improvement. But minus 9.1 billion in 2022. That is absolutely outsane. Earnings per share 0.37. Nothing to write home about there. Short interest is only about 2.2%. Dollar value 22.90 compared to 46. We're pretty much right up at the highs at the moment. So if you got a $22, congratulations to you. PE ratio of 122. The stock's got some mega growth ahead of it apparently. The market cap of 93 billion. Return on invested capital minus 2.6. What's happening with the stock? Absolutely not looking good if you're an investor in the stock at the moment, and it just continues to get worse from here. No dividend, which is not surprising. Total assets of 34 billion versus total liabilities of 24 billion. So that's not bad, but it's not the greatest, but it's definitely not bad at all. Free cash flow only 1.14 billion. Well, it's not only, it's quite a bit. And that's the best they've ever had it, so that's a positive for the stock. Long-term debt, though, that is the big concern. $9.2 billion. That is not good at all. It'll take them 9 years to pay it off right now with free cash flow. So that's where the question marks come in. Shares is 2 billion, and they have been diluting you, absolutely diluting you to the hill. So they just keep taking these stock prices up. And taking all this cash, and they bring you no return, a minus return. So what is this doing? What are they actually doing? Uber doing something positive? Where is all this money going? Is it going on autonomous driving? They're trying to beat Tesla there. Then they're going for an Uber car. I mean, there's so many things. Uber Eats has been a lost cause, and they turn that around. Even the Uber driving has been a bit of an issue with issues with some states giving them clearance. So Uber is just one of those itchy hit moment stocks here. It could be an absolute bargain or absolute rip-off. So yes, so what does Uber have to do? Well, clearly it's all about finding ways to get down, they're cutting their costs. Obviously they're growing insanely, and you may be waiting another few more years before you see any profitability. But there's some big issues with the stock. Even though revenue is exploding, that's a very good positive, but if I look at most other metrics, it's not looking good at all. Return on invested capital minus what's happening. Unless it's absolutely going to come pay them off later, then maybe it's alright. But free cash flow is quite good, but their long-term debt, 9 billion, that's just... When there was hardly any debt 5 years ago, that's very concerning. Especially at high interest rates, not good. But let's have a look at the intrinsic value of Uber. Yes. Is this company going to crash and burn? Well, we will see. The share price is roughly about $45, so don't get me wrong, it'll shoot up to $60 from here, or if it's dropped back down 25, who knows? But from time of recording, this just gives you an example. If it was at $45, what it should be worth. Okay, so I use the grams calculator, which looks at share price, earnings per share, a growth rate. This is for intrinsic value, the current bond yield. You can put whatever figure you like, and any of these ones, and intrinsic value. So share price of $45. The current earnings per share is 0.37. And for 5% growth, Uber is a $7 stock. Are you kidding me? Obviously, there's more growth than that, but $7. Whoa-wee. The same earnings per share at a 10% growth, then you're looking at $11 stock. 4x down from where it is now. Whoo! Itching my head there. And then if we look at earnings per share of $7, a 10% growth, you're only looking at $20, nearly $21 stock. Wow. Now we push that up to 1 and a growth rate of $15. We're only starting to get to near break even at $40. So wow. Now, if we look at growth rate of the revenue, absolutely it's flying up a net profit. We're not seeing it at the net profit level. But if they can get that going to similar levels of net profit, then the stock could be exciting. But right now, where's the stock at? Well, it's got growth. That's definitely, the earnings per share is not there. I think I'm more positive on Uber stock than maybe these things suggest. But I'd still be saying right now, on still pessimistic side, the stock should be $20 at fair value. Now, yes, that would mean for me it would have to go to $10. Will it go there? Probably not. Am I insane saying $20 intrinsic value on the stock? Well, my current metrics is probably about right. But the growth is the big thing. If you believe in the growth story and it's like 20%, then you're starting to look at $50, $60. And if you can really see the earnings per share grow, go to $2, and then you start looking at maybe $200 a share. But obviously they're developing a lot of stuff, and still Uber Eats and all that is not profitable. So if they come profitable, flip that script upside down. It could be a bargain price right now. So that's just stuff you need to look at. Now, Uber's definitely a stock that's high risk, high reward. It could be brilliant, or they just never get the profitability and they're out the door. So that's the question mark here on Uber, if you believe in it. But a lot of the metrics are positive, but just their net profit, not good. Earnings per share needs to go up. And obviously the long-term debt is a question mark. But if the long-term debt's making them more money, which we're not seeing right now, but maybe it's in the revenue side of seeing it, but seeing it at the bottom line is the key for Uber to continue. But anyway, that is the Barry Charles show for today. Hope you got an understanding a bit more about Uber and what's happening there and the current metrics and where it's valued currently and where it possibly could be in the future. This stock could be a $200 stock, or it could go to bankruptcy. That's how big a scale this company is. They've got to find a way to get to profitability, because if they don't, they will go bankrupt. And if this long-term debt gets worse and worse, then it's not looking good. But if they can start paying it down, then it might be exciting days ahead. But not financial advice. Do your own research before you invest in any stock. Invest at your own risk. But thank you so much for joining me here at Barry Charles. I hope you've had a fantastic day and have an awesome rest of your day out there. I have 3 videos a week for you to get into: Monday, Wednesday, and Friday. But have a great day out there.